Hey, this is Eric with Bundle, and today we're going to talk about two different business models in the mortgage industry, and there seems to be this huge divide between the two of them. You know, we've probably talked to over 1,000 mortgage loan officers this year alone about our product, and we have a lot of great conversations about where the industry is headed and what's going to win. And so when we talk to retail mortgage loan officers, so when you think of retail, think about a distributed branch network, so almost like a bank branch, but across the whole United States where there's local branches in your city, and that's how these loan officers find mortgage customers. So when we talk to retail shops, they say, hey, you know, what's really important, it's really important that we're local. It's really important that home buyer is close to us, even if we never meet. That's important. It's also important that, hey, I'm the person that's going to help them. I pride myself on customer service. I'm right here with you along the way, and I have a ton of experience too. And so that's sort of one side of the argument. And the other side of the argument is sort of this DTC business model, direct to consumer. So these are folks that are usually centralized. So think about, instead of having 50 different branches, you have 50 different loan officers, and they sit in the same building, and they attract home buyers or refinance borrowers online in a variety of different ways. So when you talk to these direct-to-consumer shops, they say, hey, consumers, they want something fast. They want to be able to find their mortgage online. They want an easy way to apply, and they want an easy way to compare their mortgage options. So we hear these two sort of competing arguments all the time. And so who is right and who has the right idea of what consumers want? And so that's a big deal, right? So what does the actual customer want? What does the customer want? And when you ask customers, they actually agree with both sides of this argument. So when you ask a customer, what do they want? They want a digital solution. They actually do prefer somebody who is local, because there's something about that feeling about having somebody that's down the street to you, even if you never meet them. They really care about the person. So they don't recommend a company to get their mortgage with. They actually recommend an individual mortgage loan officer who helped them with that very difficult process. So those two are very important, and they want something that's easy, digitally online, and they want to compare. They want to do their due diligence and find a good deal. They don't always want the best deal in the market, but they want to make sure that they're not getting ripped off, and they want to do that digitally. Now, easy to apply. Some of that difference has gone away. Most mortgage companies are adopting really, really slick applications that even pull in your bank statements and tax returns automatically. So no matter if you're a retail shop or a D2C shop, that has gone away a little bit. So I think at the end of the day, consumers want all these things. It's not just one or the other. They want all these things together. So in the future, we see something that sort of has the look and the feel of a D2C shop from a digital acquisition standpoint, but it's a distributed direct-to-consumer shop. So maybe they funnel loans all in digitally, but then they find that they're actually local to that individual city. So that home buyer feels that comfort level that they feel by having a retail loan officer close to them today. So just a little short video on the different business models of the mortgage industry and what we really think customers want.